Hey traders, TG Watkins here. It is October 14th. It's actually Friday morning when I'm recording this instead of Thursday night after the close. And we're definitely getting quite a bit of action out there. A lot of this is what I was figuring after we got the jump yesterday. Yesterday's move up was pretty crazy. And where I left you off on the teaser was that generally speaking, I was expecting price to go down because of the CPI, which was correct. I mean, we opened with a gap down because the CPI did come in hot at 0.4%. And yeah, so the market's open with a gap down, which we can see right here. So we did open with a gap down. The guidance that I had from Wednesday afternoon was correct here, where price was getting rejected by the underside of a downtrending 15-minute 50, and the Moxie indicator just was not showing anything. And we even had the Moxie indicator go red right there as well. So all of that worked out, and we opened with a gap down. But then that gap down was met with a giant, like an absolutely giant short squeeze. So boom, just really cranked on up there. So that was pretty insane to see that and what was going on. Now, we've been talking, and a lot of traders out there have been pointing out, we've been looking for, there's a lot of kindling out there, and the put call ratio is super high. Everyone is bearish. Everyone's positioned, you know, the sentiment is bearish. Like everything is bearish, and, you know, for good reason, honestly. And so that's been the case. You know, bears have been correct. That has been right. And so with that, you know, we were just kind of thinking, okay, there's just a lot of fuel to light that short squeeze fire, and we're just wondering when that was going to happen. And yesterday appeared to be that. Now, you guys might have heard the adage, buy the rumor, sell the news. Well, in a bear market, or at least going down, it's kind of the other way around. Sell the rumor, meaning go short, sell the rumor, buy the news. So now that the CPI news has come out, everyone knew it, and it's like, okay, we knew it was going to be hot. Basically, that's what everyone was saying. It's like, yeah, okay, we got it. We knew that was going to be hot, so no surprise. Okay, let's cash in our positions. So if everyone was short, or a lot of hedge funds and firms and stuff like that were short, they got the news they were looking for, and they got the drop. And so they're like, yeah, cool, let's cash in. And when you cash in on a short position, you have to buy it back. And so that is part of why a short squeeze is what it is and why it goes up like that so ferociously. You know, I was expecting a little bit of a bounce yesterday, mostly because when you are at an oversold level like this, and people want to cash in, you're going to get some natural buying just because people are trying to exit their shorts. So that made sense. But then it was right about here. And if you guys looked on the 5-minute time frame, which I don't think I have set up. Yeah, I don't have that set up. But if you guys look on the 5-minute time frame, you'll actually see an elf shoe right in through there, right in that area. So go take a look at it. It's pretty interesting. Basically a double bottom in through that area. And so yeah, that was one thing that was going on. And then if we look at the higher time frames, the other reason is that we reached about 350 on the SPY. And that is another thing that people have been talking about. I'd been talking about it because that is basically where the monthly 50 was at 350. It's also the 50% retracement from the lows to the high. That was a 50% retracement from the COVID lows. So there were a lot of technical levels and reasons for price to kind of maybe bounce and something like that. And that's exactly what happened. So pretty crazy move. Now, okay, so where do we go from here? Well, the move yesterday, so Thursday, with the short squeeze was pretty massive. But if you look, what's going on with the 15-minute time frame? We got a 50, 200, 50 maneuver, don't we? And so that's why yesterday, even though, you know, if you could trade long, definitely you could trade long on that. That was a good day trade situation. But as far as a swing trade, I don't want to be swing trading long right here, right up into the underside of a downtrending 15-minute 200. I would like to see if there's a pullback into what I consider the near-term support, which would be the 15-minute 50. Now, we don't have this answer yet. We're still looking and waiting, trying to see what's going to happen today. But you can see today is moving down like that into the 15-minute 50. And now we're just going to have to let the day go by and see if the 15-minute 50 can hold. We may not have our answer today. We might have to wait till Monday to really see if that is confirmed. The other thing is yesterday there was a pretty big move. We could see that there was a gap between price and the hourly 8 EMA, and we came up here and hit the third ATR as well. So a lot of situations there, you know, and we had price moving up into the underside of a downtrending hourly 50. Now, if we back out and we look at the hourly chart, we can see that there's some divergence, price down, Moxie indicator up, and we have basically, again, price down, Moxie indicator up, and we now have the Moxie indicator going green pretty much at the lows, which is really pretty good. So if this is going to work out, if we are going to get an uptrend, at least the hourly Moxie indicator is working out to support that. It doesn't necessarily have to work because now we need to see if price can engage. So the Moxie indicator is saying yes. Now we need to see price say yes. The other situation that we could get into is a bear flag. So we could kind of just be getting this again. So that's one possibility. We got a lower low and now we're trying to move up, and maybe we do a little bit of a bear flag, but what if that eventually rolls over to the downside? I don't think that the bear flag's over, or I don't think the bear market is over. Please make sure we understand that. Well, I'm not looking to go long because this is where we've bottomed and now we're going to move up and the Fed's going to have to pivot and all that kind of stuff. That is definitely not the case. The question we're trying to figure out is how long is this bounce for? And is there any kind of trend that we can trade for a while? And is it a bear flag that gives us a little bit of opportunity to the upside until we roll over again? There's talk about the elections coming up and, the plunge protection team. And are they just going to kind of keep things up and elevated going into the election to keep things cool and, politics and all that kind of stuff? So there's talk about that. So we just don't know. But yeah, let me just reiterate that the idea of if there is an up move, it is going to be shortly lived, and it's going to be basically back up until the next area that we want to short. I do think that the market's going to keep going lower. I don't think that I don't think the low is in. So really it's like, well, where are we going to go until we go back over? And it could be chop, it could be up a little bit, it could keep going down. I mean, this whole bounce that we had on Thursday could eventually just not do anything and just continue rolling down. So we really just need to be on guard about this and don't get too much over your skis thinking that the market's just going to keep rip-roaring to the upside. Now, if we look at the UVXY, and you guys know my 50, 200, 50 maneuver, I've been watching this on the daily chart, trying to see if the UVXY running into the 200, just like how the SPY was running into the 15-minute 200 because of that 50, 250 maneuver. I'm trying to see if the UVXY is going to move back down. If the UVXY does move back down to the daily 50, then that would also mean that the SPY is going to move up, which, doesn't necessarily have to be in the greatest fashion, but it could move up in a bear flag, which means that this could move down in a pullback type scenario, and then we get that reversal at some point. So that's kind of something I'm looking for. Again, not totally confirmed. We do have higher price here with a lower Moxie indicator here, and we do have price breaking underneath the 15-minute 50. And if this is going to keep going down, then I would like to see if price can get rejected by the underside of a downtrending 15-minute 50, which is the opposite of what I'm looking for the SPY. I want to see if we're going to be moving up, then I want to see the SPY hold the 15-minute 50. So we'll have to see if that kind of pans out. Just remember, UVXY is pretty much opposite of the SPY, but also just remember the UVXY is a crazy vehicle. It's like some weird rubber band. It is not linear to the S&P, and just you got to understand the characteristics of the UVXY, which is not awesome sometimes. All right, so the Nasdaq looks a lot like the S&P, so nothing too new there. You can see again the 50, 250 happening on the 15-minute time frame, and then the only other things that I wanted to mention were the IWM and the Dow. And the interesting things about these are that they've pretty much been holding up. They've actually done a really good job. I mean, look at that. They've basically made equal lows, whereas the S&P and the Nasdaq are all the way down here. The other thing to note is that this is a trampoline move. I mean, on the hourly chart, we're seeing a trampoline move on that pullback, which again, if this holds, then that's going to be something bullish. Now, it doesn't have to be the most amazing bullish thing, but it can still be bullish. Or it can be a bear flag, which is still relatively bullish. Bear flag as we move up into resistance and then we roll over again. So just keep in mind that these up moves might just be reloading us for the short side in the bigger picture. There is the potential elf shoe here: leg, heel, arch of the foot, ball of the foot. We'll see if we can get that elf-so, from that trampoline move. And we'll have to see if price can hold the 15-minute 50 and we kind of move up a little bit. But if there are up moves, just don't trust them too much. You can trade them, just don't trust them too much. And the Dow is a lot like IWM. Very, very similar. So I find the IWM and the Dow to be similar, and the S&P and the NASDAQ to be similar. So that's what I'm seeing out there. And then the semis are often a league of their own. They are super, super weak. You can see that they've just made vastly new lows compared to the S&P and any of the other indices. So yeah, really, really weak over here. Gosh, just still super, super weak on the hourly chart. So that's another thing to kind of consider. Is the market going to be able to really go up? Like, new bull trend if the semis are not on board? Probably not. Can the markets bear flag a little bit and kind of, revert to the mean? Sure. But the semis don't look like they're ready to do much of anything. So just keep that in mind, that when we do have still weak sectors out there, the overall market is just not going to be able to really take off and do much. And so far, I did some looking around with the market after yesterday's action. There were bounces, but it moves up from that big move yesterday, but I don't really see too much in position to be able to take that trend and really move up with it. So I'm just not seeing too much to work with. Now, gold, I mentioned this, or I'm bringing this one up today because people have been discussing gold and silver and precious metals in that big silver move last week. But again, I just don't see much going on here. If we look at gold, there might be some support and a bounce here at the monthly 50. And there could be a move up, mostly because their price is starting to pull away from the monthly 10. There's starting to be a gap. And what you can say is price likes to revert back to the mean. Like you can see here, there was a gap, price went back to it. There was a gap, price went back to the moving average. There was a gap, price went back to the moving average. There was a gap, back to the moving average, gap, back to the moving average. You could just see that the whole time. So what do we have? We have a gap, and we have potential support at this moving average. So there's a possibility that maybe, and again, I'm not saying this right now. All I'm trying to say is on a monthly time frame, we could see that price is starting to pull away from the monthly time frame, the monthly 10 SMA. And when that happens, it's just indication that maybe price at some point, when we can confirm it, might want to bounce and move back to that moving average. But I don't see anything quite yet, at least on these time frames. The weekly chart, same thing. I just don't see anything here. The 8 is still below the 21 in a pretty major way. So that brings us down to, say, the daily chart and the hourly chart. And again, there was that pretty big move last week, but it all pretty much faded and got sold into, which is what I was expecting. For gold, you can see it just running right into the underside of the daily 50. And, so yeah, just like that, not much going on there. And then you can see that up move put in a pretty big gap between price and the hourly 50. And, you can see here on the 15-minute time frame, it started to follow the 15-minute 50 down and sliced right through the hourly 50. So not much to do here. Is this a double bottom? Maybe. But do we have any signs, any clues? No, nothing yet. I mean, price is still in a downtrend. Moxie indicator's not doing much. There's just nothing is turning. So while we are coming into a previous area for a potential double bottom, there's just nothing happening. If we look at silver, let me show you on the higher time frames. This is what I'm talking about with gold. You see how there was a gap here between price and the moving average, and price all the way down here? What did it do? It snapped back up to that moving average. That was that reversion to the mean that I was talking about with gold. So if there becomes too big of a gap between price and the moving average, there will tend to be, at some point, price will want to come back to that moving average. But that happened. So look, it closed the gap and it hit exactly the monthly 10. So theoretically, we could actually be just resuming the downtrend. We made the move down. We got too far away. We got oversold. There was a gap, and you know what? It bounced and filled that gap and reconnected with that downtrending moving average. So it could be fixed, and so it could keep going lower. I don't see anything bullish on the weekly chart. Just nothing. The 8 still below 21, all that kind of stuff. Now, the other thing to kind of note with silver, let me just kind of do it this way. The other reason why this might have bounced is because where price went into, there is just, if you look left over the last, 25 years or 20 years, there's an area you can just see, just a visual line, that there's a lot of price congestion. So it might have just been a natural place to find some support and bounce off of those levels. So just kind of noticing that. And then same thing here on the daily chart. Now this one, yeah, this one did get past the daily 50 and the Moxie indicator is over 0. So that one's much stronger. In fact, it would seem that silver is leading gold, but there's still not much to do about it other than this big move right here, which clearly was overbought. You can see it's way up there. Where was the moving average? And way up here, just seriously overbought. And then just like gold, you can see how price followed the 15-minute 50 down and sliced right through the hourly 50. That all makes sense. Now, we're coming back down into this area where price has been finding some support. Is this a good place to buy? I don't know yet. We can't say anything yet. Price is still in a downtrend. Price is still in a downtrend on these things. There's no sign of any turning around yet on these lower time frames for silver. So I just don't see anything to do with them. And then if we look at, I think the best looking stock in the precious metals space, basically AG. Now, maybe there are some of the other ones that look a little bit better, sure, but kind of what I've been watching is AG. And the only reason I'm saying that this is the best one is because it managed to get over the daily 50, and now it's pulling back into the daily 50. The Moxie indicator is pretty solid, all that kind of stuff. But beyond that, I really don't have even too much to say there. And the price is staying relatively contained. You know, it's not down here, it's actually here. So that looks good, but there's still nothing for me to do with this. It's still underneath the moving averages. The Moxie indicator is still not doing much, and we're still underneath the moving averages here on the hourly chart. So yeah, just while it's holding up the best, it's also not turning around and being bullish yet. And then if we just look at GDX, as far as the precious metal for gold sector, there's nothing there either. You know, it managed to get a little bit over the daily 50, but didn't do anything there. It got, daily 50 is still in a downtrend, and we're still in downtrends on these timeframes too. So really nothing going on there as well. And then if we kind of look at USO, let's look at USO on the higher timeframes. There's been some talk about this, and the oil sector is not really. I trade occasionally if I see a really clean setup. I just don't like to do it because there's so many big major players, as in countries and OPEC and Russia and America and all this other stuff that, I don't keep up on the news closely enough to really know what's going on here and how many barrels per day and all this other stuff. So things can happen that are well outside of any of my control. And so I just, it's not really a space or a field that I like to do. It did bounce off of the weekly 200, the monthly 50, but it's also underneath the monthly 10 and underneath the weekly 50. So we saw a little bit of a bounce, but what was that bounce? This move up was because OPEC said that they were going to reduce their production by 2 million barrels per day. So by reducing production, you increase prices, and that's what happened there. Great. That's the same thing that basically happened with gold. For whatever reason, gold and silver popped. There was a really big move, but so far it has just been fading on back down. There has been no support. There is a potential trampoline move here. Price below the 50, but the Moxie indicator above 0. Potential, but I can't see anything yet. And on the hourly chart or 15-minute chart, there's still nothing here yet. The Moxie indicator spread didn't look like it's doing anything. Price is not holding the 15-minute 50. There's just nothing to do here yet. And price was able to get over the daily 50, but the Moxie indicator is below 0, and we don't see anything yet. So maybe if this pullback finally finds some support and goes up, great, but I don't see anything yet. If we were to look at something like XLE is looking a little bit better, because if we actually look at the higher time frames too, we could say that this is actually in a bullish flag. Got a little overbought, and now it's flagging back into the uptrending monthly 10, and it's flagging into the uptrending weekly 50. And yes, the 8 is staying over the 21. So, from this viewpoint, yes, it's still technically bullish. And then if we look at the lower time frames, the first thing I wanted to point out that I've been talking to my traders about is price was over the 50 here on the daily chart, but then notice the Moxie indicator was below 0. That's an inverse trampoline move. I think I've talked about this quite a bit before on this particular setup and saying, that's a fake out. That is a false long. Inverse trampoline moves can be a false long. But now that we've come back, basically did a double bottom, positive divergence, and then we have price here testing the daily 50, that there might be something here. But yesterday we had price really move up with the market as well. And what I was looking at is, well, if this is going to work out, I don't really want to be buying up here because that was a pretty big day. It's right at a double top and it is off some moving averages. If anything, I want to see if price can pull back. And if it can pull back and hold support, then great, we can go long. But you can see we are pulling back. Now the question is, can it hold and will it move up? I just don't have that answer yet. But if it can continue to find support there, great, you can be long. If it doesn't, then nothing to do about it. So that energy, XLE, that's kind of been the only real sector that I see that has some strength. But even at that, I'm still very, very cautious about it. And I'm not too excited to be jumping in on it. And then if we look at UUP as the dollar, and we come over here on the weekly, the other case that we might be talking about as far as like, okay, why might the market move up? Why might the market bear flag? Why might the downside have a little bit of not be able to get lower? Well, if we look at the dollar, and if the dollar can back off a little bit, I'm not calling a top. All I'm saying is that the dollar right now is a little overbought and might back off and kind of pull back a little bit and soften for the time being. If that happens, then it can give a little bit of a breathing room to stocks and to the market. I am not calling a top yet on the dollar or interest rates or anything else like that. The only thing I want to point out is that when the dollar on the weekly time frame gets up to or outside of the third ATR, it tends to pull back. And look where we are currently. We are pretty far up here outside of the third ATR, and at least typically you can see price, mostly gets a little bit closer to the 21 EMA, and right now it is still up here off of the 8 EMA. So not only is it outside of that third ATR, it's still pretty far away from the 8 EMA, which just means it's pretty overbought. Again, it's got huge macro things, the government and interest rates and countries and all this kind of stuff. So there's a lot in here that, and it's the dollar, it's not a typical stock. So all I can do is kind of point out these general type things and that it's been overbought. You can see here, third ATR, even this one, third ATR, third ATR, third ATR. So, there are areas where you can just kind of point out that price got overbought and it tends to pull back. The other thing I'll just note is that the pullback tends to go to the daily 50, we kind of say right there. So there's still a pretty big gap between price and the daily 50, which leads me to think that, okay, if it can pull back a little bit, as it's done in the past, that might give a little bit of a reprieve and a upward draft to the market itself. The other thing I'm noticing here is this might also end up being an inverse trampoline move, kind of like the daily chart of XLE. Price should not be over the 50 if the Moxie indicator is below 0. And so that might be another near-term indication that price is a little overbought and might start working its way back down for a pullback. So, well, those are the kind of the big macro pictures of what I'm seeing, and just wanted to walk through some of the craziness that we saw from yesterday with the CPI reaction. I mean, wow, talk about a crazy day on that one. All right, guys. Well, thanks again. I'll catch you at the next one.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.